moving average and how they work. Basically, a moving average is a line that's going to show you the average of a specific number of candles. So I'm going to come here to indicators. We are on tradingview.com, and I'm going to show you what kind of moving average you have. There is simple moving average. Basically, this is a moving average. As you can see, it's blue now. I'm going to change to white so you can see better. Okay, this white line is a moving average. And as you can see, I can define how many candles the average gonna take in account to create the line. So let's say I want the moving average to be from the last 21 candles. So as you can see, I can see here the average at this moment of the last 21 candles was here, exactly here. And moving averages are especially good to show you the trend. Let's say if the price is above the moving average, it means that it's going on an uptrend. And if the price is below the moving average, usually means that it's actually going on a downtrend, because here the price crossed under the average. So maybe it can mean that the trend is changing. Of course, if you want to really check the trend, I would tell you to go for a bigger moving average. As you can see here, uptrend all the time. And here it crossed below, but actually went up again. Here is kind of going sideways now, the market. So this is a simple moving average. Now I'm going to show you another one. That is my favorite, is an exponential moving average. Actually, I put two by accident, so I'm going to remove this one, and I'm going to show you the same moving average as 100, as exponential. And as you can see here, this orange line, this moving average is calculated with a different formula, so you can expect a different line, even if it's an average of the last, in this case, 100 candles. So some people like to kind of wait for the put two different moving average and wait for the line to cross, and this can indicate that you are changing the trend. But to be honest, here don't make much sense if you use the same one. But if you use like 50 period, it means that, for example, here you could buy and then you hold it until it crosses again, but sometimes you're going to lose money if you do that. So if you come here and you can see moving, you have like maybe 10 or 20 different types of moving average. It's insane. I have another one here I can show you. Let's say this one gonna be 52. Okay, and as you can see here, this one is 50, this one is 50, and the line is completely different because the way it's calculated is different. So to be honest, I would not use crossings of moving average to trade, but I could use moving average to see the direction of the market. For example, let's say here, if the price is above the moving average, I will look to buy, and I would never short. For example, from here to here, I would never open a short trade, but I would try to go long maybe. And some people like to wait and see, okay, the price crossed the moving average, I will go long. But sometimes this will end up making you lose trades. I would use another indicator as confirmation. So basically this is the moving average tutorial. As you can see, it can be useful. So try it by yourself, make your tests. See you later, guys.
Since I subscribed to Carlos Branco channel, I started to get the ladies.